Good afternoon, and thank you for taking the time to meet with us. Before we jump into the half-year results, we'd like to share a more in-depth introduction to our business CEOs and what we are building. As a global brand, Team17 Group represents the spirit of independence. These days, we are much more. We create games and apps for the youngest kids, for the oldest adults, and all the big kids in between. There really is something for everyone in our portfolio. Here's a short introduction from our business CEOs.
Storytoys!
I'm Emmett O'Neill, CEO of Storytoys. Here at Storytoys, we work with internationally recognized global brands. Brands we love, like Disney, Pixar, Marvel Entertainment, Penguin Random House, and the Lego Group. We take their brands and make the highest quality apps and games for very young children. I've been working in interactive technology for over 25 years now. I've worked in publishing, advertising, film and television. But since joining Storytoys almost 10 years ago, I focused exclusively on making children's apps. Kids these days start using devices from a very early age. Our mission is to ensure the content we create is age-appropriate, educational, but above all, lots of fun. It's also really important to us that we create moments that parents and children can share together. The Storytoys team consists of creative, technical and commercial people working together to create best-in-class interactive experiences. It's a mixture of art and science.
Hi, I'm Brisa Foster, CCO for Storytoys. I have over 16 years experience in mobile and 6 years experience as a mom. It's been a really exciting year for Storytoys. Following the success of our other titles of the Lego Group, we had our best launch ever with Lego Duplo and Marvel. On top of that, 3 of our flagship apps received Editor's Choice, the highest accolade on the App Store. Our monthly recurring revenue has grown substantially in the first half of 2022, and we reached over 250,000 subscribers through direct subscription to our apps. We've been growing rapidly, and our team has doubled in size in the last year. And now, as part of the Team17 group, Storytoys is really ready to take off. We've extended our licensing contracts with our key partners, and even some new ones too. Now, instead of launching one new product every 1 or 2 years, we have several new exciting titles in development.
Making content for young children isn't easy, but the combination of the talent in Storytoys and the experience and support Team17 provides is allowing us to do this at scale. It's a really exciting collaboration.
Hello, I'm Julia Pfeffer.
And I'm Tim Schmitz. We are the two CEOs of Astragon Entertainment. Astragon stands for high quality development and publishing of sophisticated working simulation games for all platforms.
With bus, construction, firefighting and police simulator, we not only established 4 valuable brands, but also consider us being the #1 in its respective simulation segment. Our games are non-violent, family-friendly and target a broad audience. We believe playing together is one of the best properties of video gaming.
To offer highly detailed gameplay and the most realistic experience, we collaborate with the world's leading vehicle manufacturers and internationally well-known brands. In combination with vibrant game environments and an easy access into our games, we make childhood dreams come true.
I'm Michael Patterson, CEO of Team17 Digital. I'm fortunate to have worked in the game industry for over 26 years now in various roles including marketing, development, business and platform. As an avid gamer myself, I'm very proud to be working at such an exciting indie games developer and label. Our mission here at Team17 Digital is to help exceptional people deliver the most eclectic, diverse and innovative games portfolio on the planet. Our games span all platforms from PC, console to mobile, across a wide range of genres for all different ages that capture the hearts and minds of our players. We come together as a team that loves gaming and are as passionate about the games that we make with our development partners as we are about our own developed titles. Team17 Digital is committed to fostering an inclusive, vibrant culture that celebrates equality and diversity, where we strive to create a sense of belonging for all. We truly believe that if we meet the needs of our Teamsters, our development partners and our players, we can continue to support the creation of new and exciting indie games for everyone to enjoy for many, many years to come.
Next slide, please. Now to take you through some of the highlights from the first half of the year. As you saw at the start of the year, you saw high quality acquisitions that enabled us to have a broader geographical reach and operational reach as we build a group portfolio for all ages, as you saw in the VT. Alongside adding additional first-party IP, such as Hell Let Loose to Team17's games label, which sits alongside our franchises such as Worms, The Escapist, Golf with Your Friends, and others such as Alien Breed, plus addition of Astragon's evergreen IPs such as Construction, Fire, Police, and Bus Simulator. It's been a busy 9 months and all are integrating well, from full integration of the label, over now known as Team17 US, into Team17's games label, which brings lots of group knowledge of building mobile subscription games and is already looking at many of our first party IPs to bring to mobile, to Astragon, which is a more soft integration where we are helping regarding mentorship, strategy, but more on Astragon later. Moving on to Team17's games label for the first half of the year. We saw as guided a quieter, sorry, the slide needs to go back one. Thank you. We saw as guided a quieter new release pipeline compared with H1 2021 and a heavy focus on our launch portfolio, which grew double-digit percentages driven by over 20 content updates across 12 titles on multiple platforms, covering games like Hell Let Loose, Worms, Golf with Your Friends, Monster Sanctuary, Neon Abyss, My Time at Porsche, to name a few, all driving that excellent H1 lifecycle management that we do so well across our back catalogue. Astragon continued to build momentum in H1 with Police Simulator that launched as a new IP last year and other first-party IP, supported by 10 additional downloadable content updates launched across all their own IP on multiple platforms. The physical distribution side of Astragon remains strong, boosted by a range of diverse titles across the portfolio, including Farming Simulator, which continues to experience significant adaptation in Germany, as you would expect from such a high-profile release from Giant. Storytoys continued to build upon the annual and monthly subscribers and saw this almost double to 250,000 subscribers of their apps. They had a good H1 and also launched over 100 app updates across their portfolio. For those that don't know Storytoys apps, think of an app as the base product with in-app purchases for additional content or subscription to obtain content updates. Parents can sign up for a subscription to save purchasing in-app single updates for the base app. Lego Duplo Marvel, which Parisa shared, has been their most successful launch to date, also saw any opportunity to talk about Marvel. I'm a big Marvel fan. So the Hulk update and Iron Man updates earlier this year. They have also extended their relationships with Lego, a multi-year deal, multi-titles, and extended their term with Disney also. Our people, really important to us. Headcount increased by 80 to 345, 52 as part of the acquisition. Attrition rates, as we shared earlier this year, is back to historic single-digit levels. Each of the businesses are growing their teams and have a net increase of headcount at the end of June. We also commissioned a half-year internal employee engagement survey update following the one we shared at the beginning of the year. There is improvement across every area, with overall engagement now up to 84% from 2/3 at the year end last year. Key points to take away: 90% of respondents said they are proud to work for Team17, previously 83%. 94% believe Team17 is a safe and supportive workforce, previously 91%. Over 90% would recommend Team17 as a great place to work, and we will be updating the ESG part of our website following the roadshow with more information. Group synergies, a really good start in H1 through 3 key areas. 1, leadership and employee working groups for key areas of the business, covering knowledge, best practice, and efficiencies across sales, marketing, development, and production, alongside cost-saving areas across our outsourcing and group buying power that gives us more leverage. Operational and IP efficiencies, as I mentioned, of utilizing Reach, Team17 US, fully embedded into Team17's games label, working on first-party IPs, as mentioned at the start, working very collaboratively regarding future strategies and benefiting the wider group on opportunities over the coming years. I'd love to share more specifically, but this is commercially sensitive detail, and we look forward to sharing more in the future. Thirdly, however, as announced in the RNS, Astragon have signed their first third-party global partnership, a very promising early access game, Railroads Online, that will be managed by Astragon as we help build it into a franchise. Astragon are developing a third-party label to help other developers with their knowledge of sophisticated simulation games, and we look forward to sharing more on that in 2023. On that note, could we please move on to the next slide for Mark? Thank you.
Thanks, Debbie. Good afternoon, everybody. I'll just take you through some of the highlights, starting with on the revenue side. So overall, revenues grew by a third compared with the same period last year. That reflects the enlarged group with the acquisition of Storytoys in July 2021. So that impacted the second half of last year only. And the label Hell Let Loose and Astragon that were all acquired in January 2022 this year. So it's really important when you look at our revenues, despite that growth, actually, we are second half weighted and more weighted in revenues and earnings than we were before, and that actually spans across all parts of the enlarged group. If we look at the organic revenues from Team17, we were very pleased with the results. This half is comparing to a very solid half last year, which showed growth against the COVID impacted half of 2020. So a tough comparative. Also, I think in the marketplace out externally, we've seen downward pressure on spend, excluding mobile. So we're really pleased that core business was able to match the revenues effectively from last year, demonstrating double-digit back catalogue growth, alongside just a single release in the first half, but plenty to come in the second half, which kind of points to that H2 weighting. In terms of breakdown, revenues, 77% of the group's revenues come from the games label, and you saw that predominantly from the back catalogue. Astragon is around 15%, with a mix of their own first-party IP, which is their simulation titles, alongside their physical sales, which include Farming Sim, which was a really strong first half, having launched an update. Giants launched that update for them in the back of last year. And then Storytoys benefiting from multiple app updates, over 100 updates to their 3 key licensed apps, generated roughly equivalent to about 8% of our revenues in the first half, so 4.6 million. In terms of first and third party IP and sales, first party IP has grown. This year it's almost double what it was in value terms, and that's benefited from us acquiring Hell Let Loose, that was a third party title, and that becomes a first party title for us this year, alongside Astragon's 4 simulation titles. So those are helping boost the first party sales up from last year. Storytoys apps with their global licensed partners, they contribute to third party sales, just so it's clear. Just moving to the next slide. So in terms of gross profit and gross margins, there's a number of things impacting them now with the combination of the 3 businesses. Games label and Storytoys are broadly delivering similar levels of gross margin, and currently Astragon have a lower gross margin because of that physical distribution, and their strong performance that has a lower margin than the owned IP. As you mentioned, that strong performance in the first half was influenced by Farming Simulator. In addition, we're also seeing increased investment in live titles. So for those of you that don't know completely about our business, we will expense lots of development costs that are put into creating new updates for titles that have been launched. So after they've been launched, we continue to create new content. Team17 produced 20 DLC content updates in the first half of the year, and we're doing more support to live titles such as Hell Let Loose, and all of those are fully expensed through the cost of sales, so they're all having an impact on gross margins. In terms of the admin costs, what I've done here is we've stripped out those non-cash acquisition-related accounting charges that are in the P&L under a statutory measure. They're non-cash, they relate to the acquisition-related accounting adjustments. So to give a clearer comparison year on year, you can see admin costs are up 8.1 million down from 4.4. So actually 3 million of that relates to the enlarged group and having the other businesses on board with all of the heads, 52 heads that came with them, and all of the overheads. We've also got headcount growth, as Debbie pointed out, so 28 more heads in the first half. That's driven some of the costs through the additional heads. Plus, we did put through salary and cost of living increases in March to be able to make sure our teams were, remunerated effectively, given all the pressures at the moment in the marketplace. Just moving on to adjusted EBITDA. This, again, our adjusted measures exclude those non-trading acquisition and share-based payment charges, and for us gives a truer picture of growth. It's in terms of value and earnings, and that's continuing to grow, and also has benefited from the acquisitions made in the year. So moving to the next slide. Sorry, no, go back. So like the final key financial slide. So in terms of net cash equivalents, the group remains highly cash generative, and always has been, and has a very high cash conversion. It is impacted in the first half, so it's going backwards because we used cash to invest in the acquisition. So in January, we acquired both Hell Let Loose and the label. We used cash as well as some shares to acquire those businesses. So overall, actually, the business remains highly cash generative. It's got an elevated cash conversion in the first half because of, actually, that's linked into the acquisition of Astragon, where they'd acquired all of their stock for their physical distribution, and that reversed back with cash coming into the business. So stripping that out, the core business has a cash conversion of 111%, which compares to 108 prior year. So continuing to be highly cash generative and with a strong cash conversion. So if you look at the bottom line in terms of adjusted EPS, again, taking out those non-cash, non-trading related charges, it reflects for us a measure of value growth in the business. And actually, as we know, is impacted by the second half weighting. So we'll expect to see the EPS, adjusted EPS and EPS growing in the second half. And so that overall EPS is a statutory measure. It's timing affected in terms of we issued 14.1 million shares in the first half to support the acquisition of Astragon. We've got all those acquisition, the PPA as a purchase price allocation of charges, accounting charges, and then weighed up with the second half weighting. So we'll expect to see that flowing through in the second half. Our effective tax rate is at 20%. That's where we guided the market. And then, our full year expectations for EPS, given all the things we've talked about and with H2 weighting, we'll expect the growth in that to remain on track for the second half. And that will be in line with expectations, market expectations for the full year. So that I'll hand back to Debbie, because she's going to talk about what's coming up in the second half.
Thank you, Mark. Have a drink of water. As you can see, we have a very busy H2 ahead. And whilst we are very aware of the global cost of living issues, we'll feel confident due to the diversity of the products across the group, attractive consumer pricing. We are not in the $70 per game range, coupled with many known franchises launching from Astragon, globally well-known brand updates for apps over at Storytoys, in addition to that flow through of revenue from the subscription that we've already taken that spread over 12 months, and TEAM17's games label, a very diverse portfolio lineup with 2 games already launched in the second half. And to talk about those, let me just explain. Sweet Transit launched in July and Thymesia launched in August, both performing in line with management's expectations. Thymesia achieving #1 global game on Steam at launch and also doing incredibly well on PlayStation. And Sweet Transit achieved top 5 global game at launch. Sweet Transit is an early access game, and we're pleased with how that started. And we're looking forward to the rest of the year. Now, just to talk through the rest of the year, you can see we have 5 more new releases, which will bring a total of 8 for the year. Marauders is already announced will be launching in October. That's our tactical first-person multiplayer looter shooter set in a sci-fi universe, and that will launch on PC. The Night Witch Metrovania adventure game is launching in the final quarter of the year alongside Sunday Gold, point-and-click turn-based adventure game. Equally, Bravery and Greed, a beat-em-up roguelike dungeon brawler for 4 players. And Batora, our interplanetary action RPG. Alongside the new releases, I also want to just touch on, we have 2 games exiting early access on Steam. Honey, I Joined a Cult is coming out of early access. We also have Hokko's Life launching out of early access and onto consoles as well. Alongside that, we will also be doing a number of updates to our portfolio that's performed incredibly well in the first half of the year. And you can look forward to additional support for titles like Hell Let Loose, Falling Dark DLC launches this month on console. Golf with Your Friends, the sports DLC update is this week. Overcooked All You Can Eat, World Food Day and Accessibility update is in October, with new content and other planned updates across the back catalogue portfolio. TEAM17 US, their planned development for mobile title release is on track, and the latest update, Wumble Golf, for What the Golf continues to have good visibility and traction on mobile. Note, when on TEAM17 US, the mobile subscription games that we're working on, it's not in our hands to actually announce those titles. They will be announced by the platform holders, and we look forward to sharing more over the coming months with you on those titles launching this side of Christmas. Over to Astragon. Astragon will be launching Construction Simulator on the 20th of September across PC and console. Bus Simulator City Ride, it will be the first outing for Bus Simulator on mobile devices. It's also launching on Switch. And Police Simulator Patrol Officers will leave early access and also launch on consoles in November. Delivery of those titles, all 3 are through their submission process, and there is no risk to those titles regarding launching this year. Storytoys plans to deliver more than 10 app updates alongside multiple smaller updates across its portfolio, and will continue to strengthen its subscription app offering and network of global license partners. You will see updates to Lego Duplo World, including this month garbage and recycling. This is about environmental awareness. We tried to show the child that recycling is sorted out in the house, but leaves the home and is ultimately made into new useful things. There is also problem solving and sorting covered too. You'll also see Dr. Doctor. I won't take you through what each of these are. I'll give you a brief overview. You will also see from Lego Duplo Marvel a number of updates before Christmas, including Fairground Superheroes and Avengers Holiday. Over at Disney Coloring World, you will see a number of updates each month through now till Christmas, September's being Pinocchio. And on that note, I'd like to move on to the next slide, please. Thank you. So regarding Outlook, a solid start to the year. We've entered into the second half with positive title releases. We believe we have a good portfolio of titles. We're always cautious in terms of locking down title releases. We're confident in the titles that we are sharing. Marauders will definitely ship in October. I have the release date. I can't share that with you. It will be announced via our Games PR side. We have a very exciting new release schedule in H2. New releases in both Astragon and also the Games label. Continued additional DLC and app updates across all parts of the business, as I've just shared. First third-party simulating title secured under Astragon's label as well for their new third-party label. And on that note, I'm going to hand over to Mark.
Yeah, thanks, Debbie. So we believe that we're very well positioned as an enlarged group. We've got a grown senior leadership team with some, you saw on the video, some very experienced CEOs leading the businesses, with Michael Patterson-Broughton on Team17, Tim and Julia in Astragon, and Emmett and Parisa in Storytoys. And they are helping us to continue to deliver on our growth plans. So we're supported by those recent acquisitions that are accretive. We can see growth opportunities in both of those businesses. We've got a very, strong underlying business, core business that you saw in the first half was able to demonstrate, real growth in the back catalogue. I mean, that's a really important part of the core business. Then you can then add on a growing momentum of new releases coming out from not just TEAM17, but you've seen Debbie talk about Astragon bringing out Construction Sim. They brought out Police update last year and Bus Sim 21. So they're bringing new content and broadening that games portfolio, which is really important. And that's alongside the overall 8 new releases being brought into TEAM17. But all of that's building up that consistent core business with a really strong content of IP portfolio. And we've really got a very healthy pipeline of development across the group, whether that's new opportunities in Storytoys for other licenses, which we'll talk about when they come to market at some point soon. Also, additional simulation titles, and as Debbie talked about, the first third-party simulation title secured for them to add to their own higher margin business coming in the future, and that is alongside the very established green light product acquisition process that goes on in TEAM17 that consistently gets significant numbers of new titles being brought to us through third-party development partners. So a very healthy pipeline. So I think that means for us as a group is that we're very aware as a leadership team and with the board that there are some very challenging broader macroeconomic headwinds in terms of inflation and cost of living pressures. But I think we've got a very strong business. The business is being contributed across an enlarged group of new acquired businesses, and that we're confident that we will continue to meet our own ambitions and track in line with some expectations across the market. So I think, Debbie, that brings us on to the next and last slide.
Thank you, Mark. Talking about pipeline, Mark just mentioned the strong development pipeline across the enlarged group. We've just shared some of what's happening in the half year for FY22. We've already announced for TEAM17's games label 7 of the titles that are launching in FY23, and I'm just going to recap it for those of you who don't know. So we've got the sequel to Blasphemous launching in FY23. We announced Moving Out 2 at Gamescom recently. We'll be launching next year. We've also announced a new title called Dredge at Gamescom, which has been received incredibly well. You'll also be seeing Gord. A lot of people have been talking about Gord, which is, this is a team that has been created from CD Projekt and 11-bit from the Witcher side, and that will be launching next year. You've also got Autopsy Simulator that we've announced, which is getting good traction, and equally Killer Frequency, which is a VR title as well. We never share the amount of titles that we're working out long time, but the pipeline goes all the way up to 25. I've just shared the 7 that we've already announced for next year, and we have a few unannounced titles as well yet to share. That's very important to us. IP ownership and growth of owned IP, partnerships with global brands, and enlarged back catalogue content portfolio. This is very important. Growth of own IP over the last few years, you've seen the acquisitions of Golf With Your Friends, which we bought from third party into first party. Hell Let Loose, that we've also bought from third party into first party. You've seen our partnerships with global brands, and you'll hear more of that at the year end regarding the activity that's going off with Storytoys, but also Astragon with the licensing partners that they work with. And enlarging that back catalogue content portfolio is really important. We truly have a vision to build a portfolio of content that is for all ages, and that's very important to all of us. Our footprint, leveraging expanded teams and geographical reach, very important. Capabilities and facilities supporting across the wider group. We have a number of working groups, as I've shared. We still have a way to go. I think we've done a lot of work in the first 9 months. I'm really excited about what we can do as a combined group over the next 12 months, where we're sharing all that knowledge and experience as well. M&A, build on recent acquisitions and target right fit future opportunities. I just want to share, at the beginning of the year, you saw a number of M&A opportunities that all happened at the early part of the year. I can tell you it was a combination of a couple of years of hard work. And we are incredibly selective about what the kind of M&A that we look for. It has to be the right fit. But also, if we're looking at IP, it's not about IP that we think is just going to be successful for 1 or 2 years. We're looking at IP that will be successful for much longer than that. We're looking at 10-15 years, and that's really important from us. In the way that you see the Worms franchise is being played for over 25 years. Games like Golf with Your Friends, they will be played in 10 years time across multiple platforms, devices, however we do this. And that's very key to us in terms of looking at the kind of IP. I think Astragon, to give you an example, I've been looking for a working simulation company to join our group for a few years. And one of the things that I came across was a lot of the companies I were looking at only had one IP, and they were very specialist in one area. And I was looking for more creativity. Astragon really appealed to me because from the creativity side of them. If you look at firefighting and police patrol, those 2 new IPs were launched in the last couple of years, and it shows the creativity alongside bus and construction that they're building, and they're evergreen. And evergreen's really important. Solid foundations, well-known brands have a long life cycle, and that really appealed. So IP on M&A is we're very careful about what kind of IPs we bring into the business. The other things that we look for, we're always looking for additional development resources. If we've got a partner where they're doing work for hire for us and it makes sense to pull them in-house on a project, that's fine. We're looking at those areas as well. But we will continue to be incredibly cautious about the kind of companies that do join this group, having the right fit. And in part, that's what's really benefited the first 9 months of this year. I feel like I've been working with these teams for a few years, and to be honest, it's an absolute pleasure working with the new acquisitions as part of the wider group. Don't expect us to be going out there and doing a huge amount of deals. We are going to be very selective on how we choose them, how they fit into our business, how they will enhance profit, but also can they accelerate our vision and our strategy of where we want to be over the coming years. If they can accelerate and we know that we can work with them to improve margins, etc., we are looking at those opportunities. Regarding the outlook, the group is positioned to deliver growth and meet our strategic ambitions. As you saw in the VT, we have a very, very, very strong leadership team across the whole group, a lot of years of experience and a lot of knowledge. And, we have quite, our ambitions are to build something quite special and quite unique. That's what drives us to do what we are doing. And on that note, I'd like to say, we're coming towards the end of the presentation. We're going to jump into Q&A, and we'll try to do as much as we can. If we can't cover all of the questions in the time, we'll take the time to go and try and update these post the presentation when we get free time at the end of the day. And I look forward to hearing more on the Q&A.
Debbie, Mark, that's great. And thank you very much indeed for your presentation this afternoon. If I may, I will just bring back up your cameras. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Debbie, Mark, as you can see, we have received a number of questions throughout today's presentation. So thank you to all of those on the call for taking the time to submit their questions. And Debbie, Mark, if I could please just hand back to you to run through that Q&A tab, and where appropriate to do so, if you could please just read out the questions and give your response, and then I'll pick up from you at the end. Thank you.
Yeah, thanks. So there's a couple of questions, I think, firstly for me, Debbie, that you can then add to, and then there's another one for you. So the first two are around linked to Storytoys. So the question's kind of around Storytoys was not profit making before. It's an ambition of ours theirs to grow it to be #1 global brand. What are the timescales to make it profitable, and where is Storytoys on that journey? Actually, Storytoys in 21 was profitable. I think what you'll see is it was impacted by all of the acquisition costs that were on their side that affected their numbers. But for us, it's a profitable business. It's adding to our Ebitda, and it's a growth story. They've increased their position in the global marketplace. I think they're at number 8, 9 or 8, and they've gone up 1 or 2 places in that position in the marketplace. So for us, they are They are a profitable business. As you've seen, they launched Marvel as an extra app, additional app at the end of last year, and they've got other plans that we can't share at the moment for other license agreements. And they continue to put numerous app updates through those licensed apps that are driving, significant growth in the business. And that comes from, I think, as you've heard Debbie talk about, subscribers doubling up to more than 250,000.
Mark, can I just add on regarding what part of their journey they're at as well?
Yeah.
I don't want to duck questions. I want to be as transparent as we can be. I'd say that they are still at the early stages of their journey. I think what's going to be important, you heard Parisa talk about, they were launching one title, one app every 1 to 2 years. And the work that we've been doing throughout this year to increase that with several launches over the next few years.
Great. The other linked question is to expand a bit on the subscription model, and I'll start, and then Debbie, jump in as we go through it. So, for Storytoys, their apps, you can open up the app free, and then you can then purchase apps on an in-app purchase basis. But actually, they've also got a monthly and an annual subscription option. And what we've seen is, before we acquired them, they had one subscription model on Disney Coloring World. Actually, we've now worked with them, and they've introduced a subscription option on Lego, and that works for both of those, Lego Duplo as well as Lego Duplo Marvel. And that's where we've seen some tremendous growth, and that's the numbers that I've talked about in terms of doubling subscription numbers. So, what it means is, and I perhaps should have mentioned it on the revenue pieces, that we only recognize, those annual subscription models month by month. So, what we know is that we're building up a significant value of that business in longer term, sort of annualized subscription revenues that get recognized over the 12 months. Debbie, I don't know if you want to add anything to the subscription model.
No, I think the one thing I would like to add is, look, we're still in the infancy on this. Mark shared some of that there with you. 2 of the subscriptions that are tied into 2 of the apps are, one is just a year old, one is only 10 months old. We still need to get more data, more information. Very excited and, very pleased with how it's gone throughout the introduction since we acquired the business and did the work with Storytoys and their partners to allow the subscription models to run through. Hopefully by the time we get to the year end, we'll be able to share a little bit more information with you. But what I can say is it's going incredibly well so far. And we do look forward to sharing more at the end of the year in terms of how that kind of revenue split starts to break down within Storytoys.
Great, thanks, Debbie. Next question would be, it starts with congrats on your results, which is great. Thank you very much for that feedback. That's brilliant. What are your goals for future international expansion, and where do you see management priorities, and how will you look to deliver this? That's probably for you, Debbie, I think.
Okay, remind me when we get through, because I'll get carried away on one part of it. Look, we have you've met some of our leadership team. I know it's only via VT. I always smile, Julia and Parisa, they're both in their mid-30s, and I kind of think, wow, I've been working in the games industry longer than they've been around, but they are incredibly experienced, with a lot of knowledge and a lot of experience right across that group. I think it's close to over 200 years just in our leadership CEO team. It's really interesting in terms of the way that we work together. Very important to me. It's very transparent and very collaborative at the top level, but we're carrying that through into the working groups across the rest. All of it, bringing in the quality of people that we've brought in. You've seen Michael, who's joined us as well from PlayStation. This is about the vision of what we're trying to build together. And we're all very excited about where we see the industry being over the next 5 years. There's not a lot that we can do about inflation and those cost of living issues right now, but we're all quite visionary regarding where we see the market being over the coming years. And so a huge amount of collaborative work goes off. We're all meet in person, 1 or 2 times a month that happens, and spend a lot of time together, but also we're video calls constantly as well. I'm very excited about building out that portfolio, as I touched on the last page of the deck. What was the second part, Mark, about international expansion?
Yeah, future international expansion.
Yeah, I mean, look, it really comes down to the M&A piece that we spoke about. I mean, we have Team17 US, Storytoys are in Dublin. We've got 3 UK locations, and we also have Dusseldorf in Germany as well with Astragon. We don't look at it in a way of let's look for a company in X company. We look for the quality of the products and the quality of the business, irrelevant of location. That drives our decisions in terms of expansion. But when you look at Team17's games label, they're working with lots and lots of partners all around the world, you know, and that's been part of our journey since 2014 and will continue to be so.
Okay, Debbie, there's a couple of product ones. So two really. One, are you working on Overcooked 3 and could it come out in 2024? And the other one is, when do you plan to port Marauders on console? So lots of future questions, but yeah.
Okay, the Overcooked question, obviously, I can't announce. That would be getting a very big telling off. You know, all I will say to you on new titles and additional platforms, we will never talk about them on investor calls, retail calls, or anything like that until we make them public. You know, so all future game announcements, we've got 4 or 5 unannounced games. You know, I think 3 of them coming next year. You know, I'm not going to answer the Overcooked question. Sorry, I said I wouldn't duck a question, but I'm absolutely going to duck that question because it's wrong of me to answer. Regarding Marauders launches in October. It's going to go into early access on Steam. You know, I flagged this title at the beginning of the year as one of my games of the year from Team17's games label. We're very excited about working with the team on launching that into early access. Have patience, early access games. You've seen what we did on Hell Let Loose. You know, it's been incredibly successful. It was in early access for 2 years and then came on consoles. You know, hopefully we can achieve the same thing with Marauders.
Okay, and two last questions. So are there any plans to take advantage of the Steam Deck?
We already have a lot of our games on the Steam Deck. If you go and check out, I think we've got about 10 games already on Steam Deck. And we will be bringing more. I'm a fan of Steam Deck if it helps. You know, I'm making my son wait till Christmas though for it. He needs to wait.
And I think the last one, looking at the time. So another nice bit of feedback. Great job with everything. This is Herman. He's excited to play Bravery and Greed with his kids. When we have a publisher working with a developer to release a game, generally speaking, what is the revenue split with Team17 as the parent? And brackets, for example, Astragon and Farming Sim. Now, I can start this and you can finish. You know, we're clearly, these are all commercial relationships. It's not going to be the perfect answer that you guys would really like, but we are bound not to share some of those commercial details. You know, but I think generally as a business, you can look at our gross margins and you can try and deduce it, but they'll range between a pure publishing deal, which will be at a lower level, to where we do a significant amount of co-development work with our development partners, and that would be typically along the Team17 side. So there'll be quite a range. But as you've seen, we do. You might not be fully aware, but we do a significant amount of co-development work on the vast majority of our third-party titles within Team17, which is why we were able to have such a strong business model with really, really high margins, I think, and deliver down to high earnings at the bottom line. So I don't know, Debbie, if you want to add anything to that.
Yeah, I'd love to give you a straight answer. We can't. It's commercially sensitive information, and you know it wouldn't be helping us to make that more public.
Yeah. So sorry about that, Herman, but thank you for the feedback. I'm looking forward to Bravery and Greed for you and your kids. I think that's the end of the question. So
absolutely. Thank you, Debbie, as well. Thank you very much indeed for taking the time to address all those questions that came in from investors this afternoon. And of course, if there are any further questions that are submitted today, we'll make these available to you immediately after the presentation has ended for you to review, and then add any additional responses where it's appropriate to do so. Debbie, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Thank you very much, and I promise I'll keep it short. I'd just like to say thank you to everybody for joining us this afternoon. Yes, we have a busy H2 ahead, and we've got a very exciting future pipeline to look forward to as well. Really looking forward to the year-end results and being able to share a lot more information. And thank you very much for everything this afternoon.
Debbie, that's great. And Mark as well. Thank you once again for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Team 17 Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.